I really appreciate you taking the time to meet with us today. We're joined by the Senior Vice President of Residential Lending at the Bank of San Francisco, Sam Clonmell, and we have done many transactions over the years, and your bank is one of the one of those lenders at the forefront of all of this TIC lending, and especially TICs that are condo convertible. And I kind of wanted to, we've got a building that we're, helping, you're co-marketing kind of with us, that we have out that's condo convertible, that I'm actually just going to bring up a screen share of it here, just so this building in Napa, it's 1530 to 1532 Hay Street. It's a massive, nearly 4,600 square foot building, and I just quickly, I'm going to turn the sound down on this, but I just love this building, man. This location is awesome. It's right up by the Panhandle. It's beautiful Edwardian. The top floor unit is 2 levels, 5 bedroom, 2.5 bath, and has 2-car parking. And then you've got the formal living room, you've got the formal dining room, you've got an eat-in kitchen. The upstairs, because of the whole attic space, has the game room kind of thing with an office at one end and a bedroom in the other end, and a half bath kind of in the middle. So yeah, it's a great space. So it's funny, and all the stuff that you get into so few of the properties that you actually lend on, Sam. It's you must. What percentage of properties that you lend on do you think you actually get in to see?
Maybe 10%, pushing it at most. Normally, I see them before the renovations, and after that, it's like get it on the market and get it out as quick as we can. So
yeah. So this is the upper level. Up in you got all the skylights. That's the office space at the other end, in between, and then there's a half bath up there. And then there's a great yard, a super deep lot. It's like 135 feet deep, I think. You can just see the whole sheer size of the property right there in the center of the scenario. So pretty sweet setup there. I'll go and we can refer back to these every now and again, but we've got the floor plans here. But tell me, with TICs, 2-unit condo conversion possibility, where does the Bank of San Francisco come into play, and how do you kind of have really creative products that make this space kind of work?
Yeah, so we've created a interest-only product that's great for these 2-unit condo convertible buildings, in which it's a 3-year interest-only arm. And what it allows you to do is pay interest only for the first 3 years. And then from there, it converts to principal and interest. For this particular building, being a condo convert, the idea is after 1 year of owner occupancy, you can then apply. And on average, we're seeing it takes about 2 years to complete the condo conversion. Once it's done, you can then refinance and get a 30-year fixed or whatever other product you want from there, but at least you'll have that interest-only payment during those first 3 years to hold you over, and then
well, you're basically not because you're going to be refinancing this loan, and there's going to be a bump in value when you actually condo convert it, because it plays into a basic premise of business on all levels, right? You buy by the pound and you sell by the ounce. So when you're buying with other people a bigger building, where you create a condo, then you're able to sell it off as a smaller piece, right? That, yeah. So, and then you guys have a great scenario where on condo conversion, you make the refinance into a new loan easy, right?
Correct. Correct.
Can you talk about that?
Yeah, so from there, it's just a rate and term refinance. And by that point, we've already gone through the process once. We know the property already. We know the individual borrower's profile. So by then, it's just a regular rate and term refi. The great thing about it, once you go through that condo conversion and become a condo, from a lender standpoint, you'll have a relatively lower than market loan to value, which gives you a much better rate and term than if you were just maximizing it and walking in at a maximum loan to value. So from our standpoint, it's just kind of a streamlined process, being that we're another property, the individual, and now we have a good idea of the newer value as a condo.
And so you just do a rate, and then what about the cost of doing that refinance and switching into that?
Yeah, so typically the cost is much lower as a refinance versus a purchase. And that's commonly with most of the common fees. We've already gone through those once. And so as a refinance, you can avoid most of those the second go around.
And, you know, like what is a typical product like this? You know, because when we get into looking at Hay Street, right, there's a 3-bedroom, 2-bath unit there that's expandable into the back of the garage. There's about 1,000. I can actually bring this up on the screen here. So we go here. So here's the 1532, which is a 3-bed, 2-bath unit, about 1,800 square feet. And then it has this almost 1,000 square feet behind the garage that they could expand into. And that's, you know, this is listed at $1.8 million as a TIC. And then the top floor unit, this is your main level here, the living room, the dining room, 3 bedrooms and 2 bathrooms. And then on the top floor, you've got these 2 rooms at the front and the rear with the kind of big kind of living room kind of scenario in the middle and a half bath. And that's priced at 2.2. So a big 5-bed, 2.5 place in Nopa. That's around 2.2 million with 2-car parking. What would a loan product roughly be on that? You'd want a 25% down payment, right?
Correct. So we're looking for a 25% down payment from a just overall scenario, minimum FICO of 700, and we'll look for you to have overall about 12 months worth of your mortgage payments in a liquid account, and liquid could be even retirement funds. We'll look at a portion of those too. I won't quote specific rates and terms because, as you know,
they're subject to change.
Exactly, and also I want to keep my lending license, so I won't quote those. You can reach out to me to obtain those, but the pricing on there is very competitive to market, whether it be for the TICs or for the eventual condo conversion.
Even on the interest only product, that rate has been really low these last few years. So I would hazard a guess at what I think it might be minus your down payment. You're going to be looking at. Let me just kind of work it out here. I'm not as fast at this as I'm sure you probably are. I'm a little on the slower side, but we already knew that. So
I won't hold it to you.
Yeah. So an interest only payment on that would be like about $4,400 a month. And for that unit, that, you know, that is half of what this unit used to rent for. So that's not that it sounds, the numbers sound really big, but when you put them into the relative comparison of what these are, just on a regular, easy to enter process like renting it, they make a lot of sense. So Cool. And then the condo conversion process, what have you seen as the most kind of challenging parts of that for people?
Usually just having a clear agreement with your other owner as to how you're going to go about the process, the costs, the fees, things like that. Great thing about it, Eddie has done dozens of condo conversions with clients. So, I mean, upfront, he's making sure that all that's defined in the TIC agreement and it's clearly written out so that whoever the other owner is, it's there in black and white saying, yes, we're going through the condo conversion. Here's the projected cost. Let's have the funds lined up. Here's the process, and let's start working on it from day one to ensure a smooth process. And that is the easiest way to get through a condo conversion relatively smoothly.
And the cost, most of the stuff that goes through on these are, it's a lot of it very procedural kind of stuff. There's a survey that has to be done on the building because you're subdividing it, and so these have to be filed away, and that costs a chunk of change there, about $8,000 to $10,000, and that's split between the two owners. And then there's fees for the condo conversion itself and process. So when we've seen it depending on buildings, like this is a building that has had a lot of work done to it via permit and stuff, which tend to be the easier ones to deal with. But it's probably going to cost 10 to 15K per unit for that condo conversion, right? Over that period of two to 3 years. And do a lot of people deal with that by just putting checks together, or do they like to make it part of the HOA where they're paying in on a monthly basis? I've seen it both ways.
Yeah, I've seen it both ways. More recently, I've seen it built into the budget, which up front they're saying, okay, X amount towards taxes, insurance, and maintenance, which is nominal, especially given a project like this where it's been totally built or rebuilt. And then also saying, okay, well, estimated to be X amount for the condo conversion. Let's put that aside on a monthly basis. So that's been a more recent change that I've seen. But honestly, I'm for it only because it's just very black and white up front, and there's no uncertainty once a payment is due for the condo conversion as to who's going to pay and when. It's like the fund's already there. Let's hurry up, press through, keep the ball rolling, and get it done.
Yeah. And then the other interesting thing I think with your bank and your product is the fact that you also do standard market financing. So if somebody was pre-approved through you, they can actually purchase a condo, a TIC, a single family. The products are available on all the different property types, whereas a lot of times with other buyers, they'll be pre-approved for a condo, and then we have to go get them approved for a TIC. So I'm curious of how many people who come in looking for TIC financing actually go with TIC or go with condo? Is there that would be a curious question.
I can't say I've had one client that's dead set on a TIC. Typically, once we go through that kind of pre-qualification process, I'm covering you for any type of property. And the great thing about our pre-qualification or even pre-approval is they cover you for just about any scenario. So if you go out and you see the TIC, but you change your mind and you want a condo, we've still got you covered either way. And that's the most assuring part, especially if you're going into a condo conversion. We've got you from the beginning. Once you get in there as a TIC and then as a condo, you can qualify with certain defects. So we cover you.
And then I think it's important to, let's say, hey, things change, something happens in life, and you have to sell before condo conversion happens. All of these loan products, you can, you're not stuck there. Somebody can come in, you can sell the unit, and you guys will finance the new buyer, right?
Correct. That's the best thing about the fractional financing. Essentially, it's just on your individual unit, and if you go and you sell it to someone else, you're not concerned about the other owner's financing or concerned about the new owner trying to take over your financing. They can do that or very well get their own. That's the great advantage behind the fractional financing.
Yeah, yeah. So, and then, yeah, that's really the fractional financing is what makes this type of lending possible. It's a hybrid commercial product that you guys use to do the financing on TICs, right?
Yep. Mm-hmm.
Yeah. So, and then so it means that kind of like the building is more like a chest of drawers, that each loan in the building, each owner kind of has their own drawer rather than it being a big wardrobe, right?
Wow. Yes. Whoa,
Yeah,
Eddie. Yes.
yeah,
Yes.
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 You
Good,
know,
great description.
you know how I love my metaphors. Yeah. And awesome. So anything, anything else, yeah, do you to give a level of how common this is, can you give us any, because you do TICs that are in larger buildings too. It's not all condo convertible.
Right.
I think you've designed that interest only product mainly because it makes more sense for the condo conversion people. But then you also have products for people who are in buildings that will never convert.
Right.
And those are kind of very like the New York stock cooperative kind of buildings, without the pesky board that you have to deal with. And being an East Coaster, you're super familiar with the whole stock cooperative scenario.
Correct. Put it on a tuxedo to get approved. Yes.
Yes. So getting the loan is one thing, but then you got to get through the board.
Exactly.
Yeah.
It's a whole different battle. But you know, usually in these scenarios with TICs, those are not. I can, well, knock on wood, say that I have not had a scenario like that. We're trying to get approved by the board. You have to really put on a whole resume and provide a whole big long background. Most of
and then they have a lot of power. Like during the height of the COVID pandemic in New York, I read an article about a guy who owned a unit whose brother was an essential worker, who was a doctor who came in to help because he was a specialist in this field, and he was staying at his co-op, and everybody in the building made him move out, because they have bylaws that allow them to do that. But anyway, we're done. That is not an issue that comes up with TICs at all.
No. I mean, to kind of bridge that gap with co-ops, the bylaws are very specific and different for every single co-op individually. It's extremely customized. With the TICs, there's a relative blanket agreement that's utilized for all of them, and then there's slightly customized for each individual unit. So we, even as a lender, we lean on the TIC agreement. We'll go through it up front and make sure it has the relevant language that allows us to provide the fractional financing. And then as a buyer walking in, really for this TIC or anyone there more, you want to have a good read through the agreement. It is pretty thick. Normally it's in excess of 50 pages, depending upon how old it is. I did see one though is very new, has all the current language that we require as a lender to complete the TIC financing.
And these agreements are, so in a lot of ways, I see the customization is really only around the actual building might have some kind of differences that need to be addressed, or the needs of the people who are in it need to figure something out. Like it's pretty much 90%, 95% of it's boilerplate that's tried and tested and they've learned over decades. And then there's 5% of it will be customized for that particular building and stuff. So
exactly. And I think a lot of the bad rap TICs get are just from, as you said, those decades of, the good, the bad, and the ugly when things weren't as formalized.
Yeah.
In the past 6 or 7 years, things have gotten very streamlined where that agreement is relatively ironclad and it covers, as you said, all the good, the bad, and the ugly.
Yeah. Yeah. And, you know, it's like anything, the early years of a process when all this kind of got up and running in the late 80s and early 90s, it was, you know, everybody was trying to figure it out. And a lot of times, you know, I noticed that the TICs that have kind of where there's kind of issues come up, it's usually where there's been a very tight friendship with the people who come together and they haven't put the agreement in place. And then suddenly 2-3 decades have gone by and now they have completely different lives and they've got different things going on in their world and they're not really aligned anymore. And the lack of the agreement is really the source of all of the issues. So,
Correct.
but when I was getting down along this, where I got lost on this path, I was trying to like, can you give us an idea of how prevalent, how much lending you guys do in this arena? Like as far as, you know, the amount of units that you might do in a given year, like for say the year 2019 or something like that.
Yeah, I can't speak to specific units, but we're averaging now a hair over about 30 million in annual production. Usually average loan volume or average loan amount is somewhere to be about 900,000. So under the back, somewhere around like 45 to 50 clients per year. And even we got comfortable with TIC financing. We did a really in-depth case study on what had gone wrong historically, not only with TICs, but with the banks that provided TICs, and how can we create a program that addresses those issues, but more importantly, makes it sustainable so that years from now, when someone wants to sell, we're still providing financing in a sound way that makes sense for the market and makes sense for us to stay around. So, being that we've ramped up the program now, we've got things pretty streamlined, and yeah,
it's
hovering around.
Yeah, perfect. So, well, that's kind of a lot of it in a nutshell. Is there anything we didn't plug at all? But while you're thinking of it, I'm going to do another screen share and get another shameless plug in for Hayes Street. You know, but that's pretty straightforward, right? It's not that complicated. There's you know, you do have to be a very well qualified buyer. You know, there is a 25% down payment requirement. But if you are that kind of a buyer and a borrower, there's a lot of benefits that are available to you. You know, there really is some great upside as you move into your future ownership and equity that you can unlock by actually just going through these steps that aren't super difficult. And there's people who you can, for a nominal fee, will manage the process for you, from doing the books to doing the applications and all that kind of stuff. And you would just have to meet on a, you know, fair, like every few months or so, just to make a couple of decisions with those vendors to kind of go through that kind of stuff. So when you know, you're this how often do you find 2,800 square feet on 2 levels in San Francisco with 2-car parking in like a super central part of the city? It's just, you don't find it, right? So
I tell you, I was shocked when you called and said this was still available. I mean, size in that part of the city, I'm still shocked it's out there. But
I know, but you know, that's what we like. We like to bring out all of this. Oh, this is the unit downstairs. All of the, you know, cool properties for of interest that are great opportunities for people for ownership all the way through to get that to that. That's what elevation is all about. If we're not elevating, then elevation's not around.
Simple as that. Simple as that.
So seeing as I was making comments about your COVID hairdo, right, when we're getting started, are you, when we get on the other side of COVID, are you going to join me back to going short again, or
you know,
is the long the lasting kind of scenario of COVID is new style.
You
Sam
know,
is
I
rolling
think
out
this
a
is
new
more of
style.
like the lazy style right now. I mean, I miss my low baldy. It's hot up there. There's now like products and a combing process. It's just too much maintenance for me. You know, I'm a low kind of guy. This is way too much for me. So
Well,
post COVID, this thing's going out the window, man.
all
Gone.
right. Well, my bald head misses your bald head. So yeah,
It'll be back.
bring it back. Bring it back. And so, if we're looking for you, Sam, where do we find you? How
Yeah.
does the world want to? If they have more questions to ask and we want to get in touch, how do we find you?
Easily reachable on my cell, 415-940-1534. Or you can send me an email, first name Samuel, Samuel, Clonmell, Clon as in Nancy, M as in Mary, ELL, at bankofsf.com.
And then the website for the Bank of SF is bankofsf.com.
Spot on.
Right there. So I love it. Hey, you're awesome. I really appreciate you taking time on your Sunday morning with a new baby and everything in the house to come out and be like chit chatting with us. So thanks for, because you probably weren't sleeping all night anyway.
No,
so,
I was up anyway. Sleep is overrated. You know, I was up anyway.
I love it. Awesome, Sam. Thank you. I really appreciate it. And as well, if anybody has any questions, it's just elevationrealestate.com. You can always find our stuff right there and reach out to us through that. Awesome. Thank you, Sam.
No problem at all.
All right. Talk to you during the week. Bye.